I think we have Gautam Shah with us. He's founder and chief strategist at Goldilocks Premium Research. Gautam, great to have you with us here on the program. Appreciate your time. Thanks very much. How's the market looking to you, Gautam? This is just the markets, I guess, climb a wall of worry, and that's what they've been doing. A lot of people, and not just sort of market participants, but because everyone is, of course, fixated with what's happening in the market. I've heard corporates asking the question, is the market's due for a pullback, right? Because many can't. I mean, I'm sure you heard what the Whirlpool global CEO sort of explained, how he explained the decision to sell some stake here in India. Corporates, and it is not just Whirlpool, but we've heard it from so many that maybe we're due for a pullback. With the market, it does the opposite. What your sense from here, Gautam?
Good morning, Prashant. Well, logically, markets top out on greed and not fear. And I think there has been a lot of concern and fear consistently in the last 6 to 8 weeks. Just because a market is stalling doesn't mean that it's stopping. I think the bigger concern for a lot of people is that the Nifty has gone nowhere in the last 6 weeks. We started the year at 21,700, and as we speak, we are at 22,200. So actually, 7 weeks have passed, and the Nifty has actually just appreciated 2%. In this very period, the market has seen a brilliant rotational internal correction, because if you look at the breadth data, only 60% of the stocks in the NSE 500 are trading above the 50-day moving average. So it just goes to show that what was overbought, what had to correct has already corrected, but it's really not reflecting on the price action and the headline indices. I think the setup is still quite solid. We are past earnings, we are past all other global developments, and I do believe that the market can build up on the gains. And this last 6 weeks is actually a nice consolidation or a higher platform for greater upside. So till we are above levels of 21,870 and 21,500, which I think are important supports, I think the trajectory is still up. The pace is still questionable. I don't think the market is going to run away from here, because you're looking at numbers of 22,500, 22,800. But as I've been maintaining all along, this is a market where you need to be in the right sectors and right themes. And till the market trajectory is up, I think there is more upside. And also from a valuations perspective, there is so much talk about markets being overvalued. I mean, at a 22 half PE on the Nifty and at a 24 PE on the NSE 500 index, there is no way that this market is overly valued.
Okay, that's saying it as you see it. Quite emphatic there, Gautam. Hi. Good morning. It's true, when the money comes in, all the valuation talk for that time at least gets pushed to the side of the table. We've seen that, right? So since you believe that the trend is still up, the question is on leadership, right? And the last couple of weeks, we don't have any clear answers. It's not banks. IT looks like it's the leader one day, then there's pharma. There's just too much rotation going on. Are you able to pick any trends in terms of what or who will take this market higher from here?
Well, I think it's been pretty clear that Reliance Industries, which is the big boy and the big heavyweight in the Nifty, has been super strong, and it's at the doors of the levels of 3,000. So that's been one stock that's kept the market higher. And the IT index, despite the range-bound activity of the last 10-15 days, it continues to be super strong. In fact, it's at the doors of the lifetime highs of 39,400. So I do believe that the leadership will come from the IT index and from Reliance Industries, where I'm looking at significant upside even from current levels. And if both these segments of the Nifty do well, which is our view, then I think the market should be safe. Even the bank Nifty, I think we've come to a point where HDFC Bank seems to have stabilized around the level of 1400, which is great. And the chances of some pullback in HDFC Bank is pretty high. If that happens, obviously it impacts the Nifty and the bank Nifty. So till the bank Nifty is above 46,000, I think the chances of the bank Nifty actually moving towards the previous high of 48,500 is pretty high. So there are many heavyweights that are actually batting for the bulls. On the other hand, I can't give you 5, 6, 7 names that can actually pull the market down.
No, absolutely. So just since you mentioned HDFC Bank, take your point on Reliance entirely. It's been the most solid stock for the index. Since you mentioned HDFC Bank, I know we don't get into individual stocks, but do you see sort of the downside ending, or do you see an upside building up over here? I mean, a lot of people are wondering whether this is the time to take that big long trade on HDFC Bank, but they've just had to wait by, and it's not coming, that long trade.
Well, I think it's quite irrelevant. To be honest, there are much better opportunities in the market. It's just that HDFC Bank is the biggest stock in the market, and therefore everyone's invested big time and, to the brim. And that's probably the reason everyone's interested in it. But for us, I think SBI has been the trade of the year. And I think we continue to believe that SBI can actually move towards a level of 1,000 at some point of time this year. So given that kind of a massive move that we expect, I think HDFC Bank will broadly remain in a range, 1380 on the downside, 1550, 1570 on the upside. It's really not going to do much. So in today's market, opportunity cost is huge. So you don't want to really get into stocks like HDFC Bank when there is so much happening and there is no real momentum on the upside.
Okay, all right. Hi Gautam. Good morning. Good to see you in Reliance. That's been the big outperformer. What are the levels you're looking at on Reliance Industries?
Well, Reliance is coming out of 1.5 years of consolidation. So I think longer the consolidation, the bigger the breakout, as they say in technical analysis. And I think it's held down to that level of 2750 really well. I think 3,000 is a psychological number. Once the stock gets there, the market will celebrate it. And I think once past 3,000, you could easily see another 10 to 15% upside, which will obviously have a huge bearing on the entire market. So I think Reliance single-handedly can actually keep the market firm. And if you look at charts of Reliance versus HDFC Bank or Reliance versus the Nifty, you will see that the ratio charts are all picking up. So it's possibly a phase for the next 3, 6, 12 months where Reliance outperforms the entire market.
Got it. PSUs, Gautam, again, it's not a homogeneous group, but everything with the PSU tag to it is done very well. So here, are there any trades to take from here?
There are selective trades, Prashant. The problem with PSUs are that they are overbought, but they're not overvalued. Because all of these stocks started doing well when they were at 5, 6, 7 PE, and now they are pretty much 10, 12, 13 PE. So they're not expensive by any imagination. It's just that they have run up so much that there is this concern that will they correct? But I think even in the PSU space, if you are in the right pocket, say some of the top PSU banks, SBI, BOB, Canara Bank, some of the metal PSU names like Nalco and SAIL, I think you should be safe. Even names like NTPC and ONGC, I do see them as structural stories and continue to do well. So you can't buy anything and everything in PSU anymore. And there is definitely room for some correction in the stocks that have run up very big in the last 6 months. But there are certain pockets which I highlighted where I think the opportunity is immense even now.
Okay. Asking you a bit of a out of syllabus question. The stock on mind is Vodafone Idea. Not asking you to predict levels here, Gautam, but I mean, technical analysis tells us that prices always move before the event happens, right? And people are trying to figure out if there's something changing, if there's a bottom that's being formed, if there's a turnaround in the works. But broadly on telecom, if not on Voda Idea, any thoughts here? We've already discussed Reliance, but Bharti, and if indeed you're seeing any sign of life in the charts on a stock like Voda Idea?
Not really, Surabhi. At Goldilocks, we like to stay with grade A. And I think for the last couple of years, Bharti has been our top pick in telecom. It's done exceedingly well. And I think there is a lot more money to be made in Bharti. And now with Reliance joining the party, I don't think I need to really go one notch lower. So I would love to just stay with Bharti and Reliance if I want to play telecom.
Okay, all right. Gautam, what about any levels on the mid-cap, the small-cap indices that you're looking at? That's been the party, right? From March 2023 till date, one would look at the Nifty and say, wow, the index has done so well. But if you look at the mid-cap and the small-cap indices, you'll say, well, I wasn't really at the party. That's, blazing all cylinders. Any levels on the mid-cap and the small-cap indices?
Honestly, mid caps and small caps are beyond levels because, every single level in the last 6 months have been cleared. The mid cap, small cap index has been range bound in the recent past. I mean, you could see the mid cap index move towards a 52,000, which is entirely doable. But I don't think it's really reflecting in what's happening in selective stocks. There are two forms of correction in the market. One correction is when it actually falls, and the other correction is when the index turns sideways or range bound. So in the last 6 to 8 weeks, the mid cap and small cap indices have just been range. I think there are very limited opportunities, so you cannot really look at the index and say that the market is up. I think auto ancillary, power, infrastructure, unlock stocks, I think these are pockets where we are more keen on and therefore don't look at the headline indices too much.
Okay, individual stocks that catch your eye. Gautam, what are global markets, particularly US markets, telling you? What's the yield telling you? Because the 10 years back at 4.3, there's been a dramatic, of course, NVIDIA-led rally, all-time high for the indices. But now even, Wall Street has gone into a bit of a pause zone. What are the indications you're picking up there?
Well, I've been a firm believer that India and US have moved hand in hand all along. In fact, if you look at the data since March 2020, our move and the move of the S&P 500 has pretty much been hand in hand. And I think this is going to continue. So when you have strong global markets, I mean, look at European markets, they are all at lifetime highs. Look at US market indices, they're all doing well. And we've had a series of higher tops and higher bottoms. And I still do not see any signs of topping out in the US indices. In fact, the Russell 2000 is coming back very strongly. The NASDAQ still looks good for another 7 to 8%. And the top 7 stocks in the NASDAQ and in the US are still super strong. I mean, look at Amazon, look at Microsoft, NVIDIA, all doing well. So the point is, when you have a positive US market setup, which is still the case, I don't think the Indian market setup can get derailed. And with almost 19,000 crores domestic money coming into the system every month, you need something completely out of the box to derail this market, and therefore it looks difficult.
All right. Gautam, thanks very much for joining us. It's a pleasure having you with us here and getting that perspective from you.